Oh my goodness. Should we quit a Ziidi money market fund? Why is its interest so horrible? It's around 7%, 8%, 9%. What do we do, Joseph? I feel like I can quit. By the way, if you don't know what is Ziidi money market fund, it's a new investment platform that is offered by Safaricom with conjunction with other two great asset managers, LA Capital. We have the Sanlam there and also other ones. Are we together? I think Standard Charter. Standard Investment Bank or something like that. Now, the point is, why are they giving this horrible interest? Why? I mean, what's going on? 7%, 8%, 9%, where some others are at 14, 13, 12, for God's sake, above 10. What should we do? And what exactly is going on? There's a video nitajaribu kujibu, or I will try as much as I can to answer. By the way, that part I sent nitajaribu kujibu, it's a Swahili saying, I'll try to answer for the sake of my international viewers. I'll try to answer what might be going on. And remember, whatever I'm sharing here, it's my own theory, it's my own understanding, it's my own, I don't want to say guesswork. Professionally, it's my own kind of be like, what could be the cause? Why are they giving that interest? You know, I'm trying, this is my own research. Are we together? You can also do your own research. But anyway, it is what it is. Now, don't forget to subscribe to this YouTube channel. Why should you even subscribe? Why do I even tell you to subscribe? Because I upload this kind of videos each and every time, okay? Each and every day, by the way, for your information. Now, what could be the reason why are they giving this horrible, horrible return, yeah? And I'm trying to ask myself, what could be the cause? Then something came in my head. Number one, they have less areas of investments to leverage on. What does that mean? They have less areas or investments to leverage on, Okay, let me make simple for the common mwananchi. Okay, this simply means, if you look, see, Ziidi Money Market Fund started on around December 2024. I'm making this video on around March 20s. Are we together? I don't want to say which day. 20s, 2025. This is basically like 4 months, isn't it? It's a new kid in town. Now, you ask yourself, right now, most of areas where money market fund companies invest are treasury bills, that is T-bills, corporate paper or commercial paper rather, and then FDS, fixed deposits. Now the question is, let's look at this, where they usually put the money a lot, the treasury bills. Right now the treasury bills, it's around 8%. 8% and 9%. And if it goes a lot, maybe let's say at most 10%. But let's just cancel 10, it's around 8 or 9%-ish there. Now the question is, these treasury bills, there was a time when it was 16%, isn't it? Okay. Now, another thing that areas of money market fund, that money can also be invested on treasury bonds, but not long treasury bonds. Are you together? So you can find a company, say company X, had a fraction of the money invested in treasury bonds, then they can leverage. There was a time we had an IFB that was going for 18.4%. I think that was the highest we have ever had in Kenya. Now, this Ziidi has actually come into the market where the returns in these, we call them the cash or cash equivalents, these likes of the government securities and what have you, the interest has actually gone down. Then it means they've gotten into the market when the market is not so decent. By the way, the last time we had interest of 7% was back during the COVID-19, when the market was so horrible. And of course, there's no problem. We can understand what was going on those times. But now, Ziidi does not have areas to leverage on, because unless they go to the secondary market and buy these bonds, buy these bills, buy whatever, so that at least they can be able to leverage and give that huge cash. They can do that. Obviously, I know you can ask me, why aren't they doing that? Well, they're the only one who can answer why aren't they doing that. So that is one area I think probably they are not, they don't have that advantage in the market. They have not been there. Number two, because I mean, Safaricom has been there like for years. You may forgive Safaricom, but somebody like Standard Investment Bank, that's a giant, that's a big asset manager. Something like Sanlam, beautiful and wonderful insurance company. ALA Capital, a beautiful and wonderful giant. So they are professionals. So you wonder, why aren't they, leveraging on that? That's an area to investigate later. But two, I tend to think that there is a high demand. There is a high demand for Ziidi money market fund because of its convenience. It's convenience because accessing it, you do not go the hassles and bustles, I don't know, filling forms, I don't know, you visit them physically, I don't know, you wait, or you are whatever. It's just a click of a button. You just dial whatever, go to that, you have your Ziidi money market, boom, you have your account. So it becomes easier, and then you find most of the people are coming in, and then that high demand, then they tend to be like, you know what, when the demand is too high, they can't, they're just like, I mean, after all, they will come anyway. Safaricom has been tested by times and times. Safaricom, M-Pesa has been there. I think for this is, I think is the 18th year, if I'm not wrong. I stand corrected. So they're like, people at the end of the day, this is an area, and then maybe they can argue from the point of, it's far much better than what we offer. Say M-Shwari, say, just having your money lying idle in your M-Pesa and what have you. So they are kind of, what, they still need us. So, it is what it is. So yeah, let's just give them that interest, So there is that high demand. For example, in a period of 1 month, they actually acquired 2.85 billion. Right now, I understand they are heading over now to 10 billion. Can you imagine that? In a period of 4 months, 10 to 10 billion. The moment you hit 10 billion in a money market fund company, you now become a tier one. You now become a tier one asset manager, tier one. And now that's where they are heading. So you can imagine, some money market funds have been in operation for years and years. They have never hit the 10 billion mark. These guys are about to hit it in 4 months. So they show there is a high demand. All right? So there is a high demand. So when there is a high demand, of course, what do you think happens? For example, I don't want to mention companies here. What happens is that when, let's say, they're offering good returns, of course, they will attract more people to come into that particular money market fund so that at least they can have more. You see, the more a company has more money to manage, to invest, that company becomes stable and stable and stable and stable and becomes reliable. Are we together? Now, the point is, this is actually heading there. Number three, which is also making me feel like there must be also a reason for that. These three guys who have come together, the Safaricom, the ALA Capital, the Standard Investment Bank, and Sanlam, these are three asset managers. Three asset managers coming for one bride. Now, when you have too much, there was a time I tried to open a group of professionals, yeah? I'm a graduate, and of course I tried to bring together people who are as smart as I am. I mean, anyone should consider themselves smart, but of course be open to learn, okay? But do it in a humble way. I'm telling you, the moment you come into a group of very smart people, you tend to analyze to a point of paralyzing things. So I tend to think like them having these three professionals on board, I don't know, there is a way the LA works, there is a way the Sanlam works, there is a way Standard Investment works and what have you. So you find like everyone is coming with their own thinking. So you find like there is a sort of a disagreement on the table. Like you find like they are, you know what? Let's then start just invest on treasury bills. Nothing else then. Nothing else then. So you find in Swahili there is a saying that says that ndovu wawili wakimenyana nyasi ndio zinaumia. Simply means like when two, I don't know how I can say this in English. You see, when two oxen fight, those who get hurt in the grass. Wow, that's a very literal translation. I hope it makes sense. Now, the point is, you find like these companies, you see them coming together as three big professionals, and of course they need something out of that. So you might actually end up having like, they're having a small thing that is shared by a lot of people. Then whoever ought to benefit, who is the investor here, because this money is not theirs, it's our money, the investors that is, then you find like they aren't getting that decent return. So I think also that can actually be a reason why they're doing that. Again, I say this is my own research, okay? Another thing I also think like why this is happening, they have these low returns. It is free, no transactional charges, no transactional charges. And of course, there's nothing free. That's what you're supposed to understand. See, people tend to think, oh my goodness, they're not charging me anything in transaction. Nothing is free on earth. Even when you go to a supermarket and find that they're selling something at a discount, there's nothing like a discount. Either that thing is about to go bad, about to expire. There's something. It's not free. Come on, it's not free. It's not. There's nothing free under the sun. Nothing. The last time we had free things was in the Garden of Eden. And of course, we are not there for now. Now, the point is, this no charges thing, maybe they're like, you know what? This guy could have actually charged them when they're actually depositing and withdrawing. Say company X charges X amount of money, we are not charging them. So even if we give them this percentage, then at least they are doing what? I think we are fair or something like that. So these no transaction charges, I think maybe it can cause them giving these low returns and what have you, and such kind of thing. So those several theories and my own thinking, I tend to think like might be the reason why they are giving these not so attractive investments. Now, the question is, should you withdraw your money from there or should you look for alternatives? Definitely, if you have somewhere where you can get more money, I mean, and it's a reliable company, definitely that is no brainer. Go there, invest your cash. Because MMF is MMF. Maybe you can go to Etika, money market fund, Maybe you can go to Loft Carbon. Maybe you can go to, CIC. You can go to Sanlam itself. They have a money market fund. That's the funny thing. You can go to other companies. Anyway, I'm not partnered with any company. I'm not an agent of any. That's why I'm saying them random, because nobody has paid me. Anyway, if you're watching me and you're from any company, you can partner with me. We can do business. But it is what it is. You can look for others that have better cash that are giving you returns out there. Or you can simply stay there. Where? In the Ziidi money market fund. Why? I mean, after all, it's far much better than having money lying idle in a bank. Even if they're giving you 7%, it's far much better than having a 0%, isn't it? True. Yeah. So you can stay there. So it depends, Or you can maybe get a fraction of what you have in Ziidi and put it somewhere else where you're getting a little bit more, leave some others there, and then you can have that kind of diversification, something. Yeah. See, in investment, you don't put all your eggs in one basket, isn't it? You can have a little bit there. Maybe you want to have some cash that you can, want to access at any given time. Then others, you can go into a bank, open a money market fund there. You can go to Cooperative Bank, you can go to NCBA, you can go to ABSA, you can go to other companies, Britam, whatever, open an account there. You see, I'm mentioning these companies because anyway, they are ours, isn't it? So yeah, it is what it is. I don't know why we usually feel comfortable mentioning some big companies like Tesla and not mention ours. Anyway, it is what it is. So you can actually get some fraction of your cash to those investments and such kind of a thing. And I hope Ziidi should up their game a little bit and pull up their socks and give us a bit of a decent returns. But of course, we're not calling them to risk our cash anyway, because we can ask for bigger returns than they risk all our cash by starting businesses. No, we don't want them to do that. I mean, let them stay within the confinement of the rules and laws as far as the CMA is concerned. That is Capital Market Authority of Kenya. This is good, Joseph. But in case I get any new information as to why this is happening, rest assured that I'll try the best I can, by God's grace, and will come here and share with you what exactly is going on in the world of investments. And if you need my services, by the way, let's say you'll be like, I think I should diversify. But then if you ask me, this is the best time to invest on shares. This is the best time to invest on, the moment you realize the interest rates are going down in these financial markets, the money market fund, the T-bills and whatever, is usually an opposite in the, what do you call them? The shares, how can we call them? Stock market. Usually goes high. Yeah, we can also try the FIF, the fixed investment fund, blah, blah, and other areas. Anyway, if you feel confused, you don't know how you can go about that. That's why I'm here. You can grab that number of mine, give me a call, let's talk business. I can be able to take you through step by step for just a cup of coffee's price. When I say cup of coffee's price, I don't mean literally price of coffee. I mean it's affordable. See you there in the next one.